Hi guys, welcome to Investify, where we help you grow your wealth through smart investments. In this video, we will examine the current state of the housing market and answer questions on everyone's mind. Will there be a housing market crash? We will be looking at home prices, rental markets, and other factors that affect both homeowners and renters. Using March data, we will provide a 3-year chart of home prices and discuss recent trends. While home prices have increased by 3.7% in 1 month, they are down 6.9% from their peak in May. Despite recent seasonal increases, year-over-year home prices are down by 3.3%. Regarding the housing market, some experts have predicted a massive crash, but I disagree. While home prices have dropped 6.9% from their peak, my previous prediction was that they would bottom out at around a 10 to 15% decline, and they have only fallen by 6.9%. I will explain why a crash has not yet happened shortly. Before that, let's look at mortgage interest rates. This 1-year chart shows 30-year fixed mortgage rates sourced from Freddie Mac, which peaked at 7% in the late 2022, but have since drifted sideways. If you have a mortgage with an interest rate of 6 to 7%, the majority of your payments will go towards interest, leaving very little to pay down your principal. If you have an extra cash available, it may be wise to use it to pay down your mortgage principal. This will give you a return on your investment of around 8 to 10% pre-tax. In addition, the number of homes sold each month has fallen by 19.5% year over year. But this is an improvement from the 33% decline in January. The number of homes sold in March has increased due to seasonality. Let's take a look at the number of homes being sold. According to a 3-year chart, the number of homes sold each month has fallen 19.5% year over year. Although this is an improvement from the 33% decline in January, it's still lower than previous years. However, it's important to remember that home prices depend on supply and demand. While higher mortgage rates have reduced demand, they have not caused a crash in home prices. To trigger a crash, there must be more selling pressure than buying pressure. Currently, home prices are not crashing because there are fewer sellers. As of March, there were 1.4 million homes listed for sale, which is a 7.1% improvement from last year. But it's not a flood of new sellers. A 3-year chart shows that supply is still low compared to 2020 levels. One key point to consider is the percentage of homes sold above list price, as seen on this 5-year chart. In March, 28.5% of homes sold above list price, which is back to pre-pandemic levels. It's important to note this point to manage buyers' expectations and show that while the real estate market may be cooling off, it's not a disaster right now. It's unrealistic to expect a huge discount on every home you come across. More than 1 in 4 homes are actually selling above list price, just like before the pandemic. Therefore, if you find a great home that you think has fantastic value, and you have to go above the asking price, don't feel bad about it. However, if you're a seller, make sure that your expectations are realistic. The market is not the same as it was a year ago, when 60% of homes were selling above list price. To understand the housing market, it's important to remember that it's driven by supply and demand. The statistics I've shared are national averages, and the situation can vary depending on where you live. Looking ahead, the consensus for the rest of 2023 is that buyers will have more bargaining power, although it's still a seller's market. This is because higher mortgage rates have decreased demand, which means there are fewer buyers. Home prices will differ greatly depending on the region, with prices in the West being more volatile than those in the East, and prices in the Midwest and South being more stable. The housing market will be significantly impacted by mortgage interest rates, which are predicted to slightly decrease in Q4 of this year. The housing market is influenced by supply and demand, so keep that in mind when making any investment decisions. Morgan Stanley predicts that home prices will continue to slightly decline until Q3, but expects the environment to turn from negative to neutral at that point. However, they do not expect a big rebound in home prices after hitting bottom. Vanguard reports that home prices were down 3.3% year over year in March and expects a 5% decline year over year. But Vanguard does not expect a housing market crash due to a lack of supply of homes for sale. For renters, landlords have less power now compared to last year, and rental units are not filling up as quickly. Smaller rental units have seen the fastest price growth, with studio units seeing a 4.7% increase in March. Rent prices are still going up year over year, but at a slower pace. In summary, the housing market is shifting towards a buyer-friendly market, and while home prices are expected to vary greatly by region, there won't be a big rebound in home prices. The situation for renters has improved, the landlords having less power and smaller rental units seeing faster price growth. In western states, rent prices are growing at a slower pace compared to the northeastern states due to job cuts in the tech industry, which have been hurting the rental market in western cities. San Francisco's rents have decreased by 0.8% year over year, which is the first decline in 2 years. Meanwhile, Midwest cities are seeing the fastest growth at 5.9% as these markets are the most affordable and are catching up. As for my opinion, I still believe that home prices will go down by about 10 to 15% from peak to bottom. Although they have already decreased by 6.9%, there is still room for further decline. However, I don't think we'll see the greatest housing market crash of our generation. Many people here share my opinion and don't anticipate a significant crash. I provide honest assessments of the situation without resorting to clickbait tactics. While I understand that many people may be rooting for a housing market crash due to the unaffordability of housing, I don't want to give false hope that it will happen. In my opinion, there simply aren't enough sellers in the market to cause a crash. During the Great Recession, 2.9 million foreclosed homes were dumped onto the market. But this year, we're only expecting around 100,000 foreclosures. This is a small number compared to the 6 million homes sold last year. There's not an overwhelming amount of sellers, and the unemployment rate is low, which means that people can make enough money to pay their mortgages. If you think that a housing market crash is still likely, then tell me, where are all these sellers going to come from? Please share your thoughts in the comments below. And don't forget to do your own research before making any investment decisions. Well, that's it for today. Thank you for watching. Don't forget to like this video, subscribe to our channel, and ring that notification bell for more updates here on Investify.